Hi guys, welcome to Digital Empaths, and we are your host Sushant Ajmani.
And Sundar Balakrishnan.
So guys, we are really privileged to have a new guest in our episode today. His name is Gautam Jain, who is the Director of Enterprise Risk and Compliance with a very leading risk consulting firm. He is currently based out of Sydney, Australia, and we are really honored to have him in our episode today. So Gautam.
Hey everyone, thanks Sushant, thanks Sundar for inviting me across for this wonderful session across with you guys. Yep.
So Gautam, I know you have been working in the industry for over 15 years now, and the last 10 years have been with enterprise risk and compliance. So I know you spent some time with Kotak Mahindra here in India, and you were working as a part of their wealth management practice. And I think you also got a privilege to work under Karan Bhagat. And I know he's one of a very eminent personality here in India, the CEO of India Infoline. So what was the experience working with Karan?
I think that was one of the most enriching experience for myself, working in the Kotak Wealth Management overall and working directly with Karan and handling his portfolio of clients. I think that was one of the best experience. The way he actually made me the person who I am today, along with a few other colleagues, and I believe they are equally well known in the industry, equally as Karan is, which is Mukund Raichur, Jitendra Chawla, and Karan Bhagat. I think they made me the person who I am today, making me understand the entire financial product portfolio. So I think that's what is the fundamentals of everything. Yeah.
Wonderful, wonderful. So I know Gautam, last 10 years has been too much into risk compliance, and it's pretty latest trend right now. I think last 6-7 years, we have been constantly watching this sector, and both Deloitte, McKinsey, KPMG, I think they have published multiple articles around risk and compliance. And we are seeing a wide array of risks which have emerged in the last few years. I think we are not talking about risks which are just internal risk anymore. There are a lot of macro factors which are bringing some new unprecedented environments for the organizations to tackle into. We are seeing a lot of cyber attacks these days. We are seeing a lot of geopolitical unrest. The climate changes are becoming a bigger challenge. I think last 12 months, there have been a lot of debates about the climate change across the world. And there are a lot of other disruptions which are happening within the organizations. And it's not just restricted to one sector, whether BFSI, but also in some of the other CPG, FMCG companies, and some of the telecom, which is another regulated sector. So, and now lately we are seeing this epidemic which is going on because of COVID-19. And how are you guys manage these kind of things? I know in this kind of a volatile environment where there's a lot of uncertainty, a lot of ambiguity, what is the role of enterprise risk and planning or compliance in this area?
So, well, as you rightly said that, yes, in the last 10 years, in the last 1 decade or 2 decades, the kind of risk which has emerged in this global environment is unprecedented. We haven't seen those kind of risk in the past 30, 40 years, but yes, definitely with the booming up of the IT and the infrastructure across the world, the risks have definitely emerged quite a lot. What the enterprise risk and compliance function actually does is, it actually tries to design across the solutioning of the different kind of risk which can emerge in the next couple of years to start with, and definitely to anticipate the kind of risks which are there in the next 5 years or so for any organization. That's the one thing. And then obviously by discovering, solutioning, and obviously designing the right appropriate risk framework across those kind of risks, you actually try and take an informed decision by the executives of the organization. So that's the first and foremost role, to actually mitigate, reduce, or remove the risks which are there in the environment. So yes, that's the pivotal role which every CRO's function is across in every organization, to design, to think about it, and to take an informed decision.
Okay. And there was an interesting article I was reading from Deloitte where they mentioned that I think lately the organizations have realized that 100% risk prevention is not feasible at all. And especially in this hyper-connected environment where we are living, where all the executives are connected with multiple devices, their reputations are also on stake, the company's reputations are also on stake. And there's a lot of proactive investments are happening in the vigilance as well as towards resilience. So what's your take on that?
So in terms of, as you rightly said, I mean, across the world, and as the Big Four actually says across, you cannot actually prevent all the risks. You can either prevent, reduce, remove, or mitigate the risks which are there. However, what happens across with every kind of risk is that how you would anticipate across is in terms of the ops resiliency, which has just come across with the pandemic, which is just arising across in the last few months. Now, the ops resiliency is the biggest factor which has come across because of the fact that now organizations are not able to sustain the kind of even the BCP environment. And given the BCP environment, I think because of this resiliency factor, everyone has to go through the digital path. Even across the risk frameworks, across the risk appetite statements, or even across the entire ops resiliency, as we may call it, operational resiliency. That is something which is going to change across in the next 1 to 2 years, definitely. And it is going across in the path of being digitized entirely. That's one thing which we can clearly see across the geographies, US, UK, definitely, and Australia obviously leading.
Okay. We are also seeing there's a lot of new data protection laws have come up, and I know you spent some time in London also. And a couple of years ago, they came up with GDPR. We are seeing in America, there are also California data protection laws are also there. In India also, we have the ISO, ISMS laws are there. So there are lots of new bodies which are emerging up. The things are becoming more and more strict. I think the consumers are definitely on the better side because most of the things are for their benefit. But how are the enterprises tackling up?
I think it's the part of the compliance which now actually every organization is trying to keep up the pace with. Now, rather than actually coming across to the organization, the first part is that the organization actually started to take the data, the personal data of every single consumer, and post that these laws actually came into picture, which was to prevent the misuse of this kind of data. So the organization already had this kind of a data. Now it's time for them to realize that, okay, this kind of a data is something which is not their data. This is for them to prevent of being or getting misused, number one. And secondly is to inform the customer whom they are serving that this is something that we are trying to protect for yourself. This is not our data. And this is something which we are going to be serving you guys. And whatever you guys tell us for your data, we are going to do with that. And that's how the law is actually trying to, convey across the entire geography, even for GDPR, across the world, whomsoever consumers are there from the European entities, they're all trying to tell that, guys, you cannot use our data. So that's come up after every single firm in the world have actually started collating all the data points for every single consumer. So it's just keeping up the pace for that.
It's interesting you bring in the data aspect. Just an observation, just in the last couple of days, Zoom has in fact added a feature to have a password, and they're now allowing hosts to allow or admit participants in because of some recent incidences that they've had. So it's interesting how, a pure play tech company is also understanding the importance of having these kind of risks that are a reality and protecting themselves from
that. And I think there was a big goof up that happened. And I think the CEO came out publicly and asked for an apology. And I think they were not very mentally prepared because of this whole sudden surge in the volume of traffic that they received.
True.
And you know that everything is on cloud these days. And I think it becomes more important when the things goes to the cloud. So Gautam, in your case, I know you work in the BFSI sector, which is never in favor of putting things on the cloud. I think they've always been traditionally, I think they've always been lagging behind in adopting the digital adoption. So what's your take on that when you work in the Sydney, when you're working in some of the large banks in Sydney and some of the big companies that you work in London? What kind of a trends you are seeing in terms of adoption of the cloud technologies?
Well, the Western Europe countries are much more adaptable to the new technologies than actually being Australia or the US as well. I think Europe is far ahead. With Europe, I think all the major firms and all the major BFSI or the financial institutions are much more favorable in getting and adapting to the new technologies, including cloud and all of that stuff. Australia and US are probably trying to just follow what European banks normally do. That's how the trend has been over in the past. And that's what we have seen even in Sydney as well. I think with the current scenario of the pandemic, every single organization is now trying to go into the cloud. And in the last 2 months, the banks which we are working with, these are the big 4 banks in Australia. In the last just 2 months, they've tried to move almost their 60% of their data across on the cloud, which is a big move for a bank,
Wow.
which is isolated bank in the geography over here. It's an island completely. They have the domination in this sector, and then just moving 50 to 60% of the data on the cloud, which is a big move.
Yeah,
so I think it's actually trending. The best part now is that how secure can the organization keep the data on the cloud is something to see. And that's something which we have to see from a risk perspective as well, that what kind of risk preventive measures we can put across for these kind of things.
And I think it'll also be interesting to see, and I've seen this in Indian banks as well, that what part of your data are you okay to put on the cloud, and what sort of core transactions you keep it in your local environment. You don't push it to the cloud. Some other data which is a little more obfuscated, if you will, can be moved to the cloud. I've seen some of those trends in the Indian sector, but is that something that's also being considered in the instances that you're seeing, Gautam?
I think what they are trying to do across is moving across from the transaction-based data, which is on cloud, versus the primary front or the client-facing data part of that straight away. I think that's where they need to move across. But yes, definitely the transaction-based data is now completely on cloud is how they are trying to move across with the trend over here in Australia.
Oh, that's
so rather than actually segregating between the nature of data, they're actually segregating in the activities which can be put across on that particular part.
That's an interesting way of looking at it. One question that I have is in looking to set up a risk and compliance practice for a client, what are some of those best practices or considerations that an organization should keep in mind? Maybe if you had to say 3 of them, what would those top 3 be?
Fair enough. So moving into a risk and compliance function altogether, I think the first part is that every organization have to set up as its front end core and the backbone of their system, definitely, because compliance is a no-brainer. It has to be set up, otherwise your regulatory licensing can just be cancelled straight away. So that's one part. The second is, I think, the way we have integrity inbuilt into every single organization's DNA. Risk and compliance should also be built across in terms of the DNA of the culture of the organization. That's one thing.
Oh, that's interesting.
The moment you have your risk and compliance in your employees and in the culture of and the behavior of the employees in your organization will be much more sustainable. Versus, let's take a very small example of maybe today's digital firms I can probably take across, or all the new firms which are actually trending across in this world nowadays. There's a very thin line of difference between efficiency and ethics now. You're trying to do every single thing through getting efficiency or through being more efficient across by putting in new technologies, AI, ML, RPA, those kind of stuff. But you actually, while putting that across, you have a right intent to do that, but you actually forget at times ethics or the compliance part of it, which means that you tend to forget that what your regulators, be it ASIC, APRA in Australia, or be it RBI or the SEBI in India, or be it the prudential standards in UK, you just tend to forget that you also have to follow them. You also have to protect the customer. So the moment you actually mix your ethics with your efficiency factors, which are these kind of organizations are now bringing across, your risk and compliance function can just be set up over there. And then obviously, I mean, the third part is how much you actually have your risk appetite. So setting up a function will definitely mean that how much risk appetite does your organization want to actually have?
Yeah. And it's interesting you mentioned startups. I wonder if, and I know both of you have had the opportunity to have startups run them. I wonder if setting up a risk and compliance is one of the first things you think of, because you have limited funds in which you have to do so many things. How far down the pecking order does a risk and compliance come? Will be an interesting, thing to think about for a lot of organizations. The other thing I had, Gautam, was that as these organizations are evolving, you very early in this conversation you mentioned data a few times. in the risk and compliance function, how important are you seeing data? And you mentioned, being able to predict. How is that playing? How much of the composition of a risk and compliance team changing from what it was, say, 10, 15 years back to what it is today? What kind of modern roles are coming in? What are your thoughts on that?
Definitely. I think maybe 20 years back, if we just look at the trend, or 30 years back, it was more and more around just two kind of risks which are there normally: credit risk and market risk. Versus now, in the last 20 years, I think operational risk and compliance risk have played a major component in terms of every organization's spend. Now, the cost of compliance across every organization have increased significantly in the last 10 to 20 years because the kind of regulations which have come up. Earlier, the regulations were not coming up every now and then. In today's world, every 6 months, there's a new regulation coming up for something or the other, whether to change the organization, whether to protect the customer, or whether to actually having a better market segmentation across being done across. Right. So when we say across in terms of, the operational and the compliance risk in the last 20 years, the way industry have matured, the way kind of data they are actually using, it was just based on financial risk earlier. Now it is coming across to non-financial risk, which means that the moment you have to do financial stress testing, the moment you actually have to do scenario-based testing, all of them will require a lot of data points. Earlier, it was just about obligation and then fulfilling them with few controls. But now it's more about getting a lot of data across the world for their respective organization, do a stress testing, do a financial analysis, and then only have a risk appetite statement built across any organization, what you could afford to actually lose or to actually get into a risk in the industry.
So that's a very interesting point you mentioned, Gautam, where I think especially in this hyper-connected environment, I know some of the banks or insurance companies or some of the big, maybe automotive company that you work with, they all have global presence. I think they're dealing with multiple suppliers, they have distributors, they have consumers that they need to entertain to. And in this hyper-connected environment, there's a new term which we are seeing called collective risk management, that how the other parties can also contribute into that. It's not just the corporate responsibility, but all the other people who are a part of this ecosystem also have to play a key role. So what's your perspective in that regards?
I would actually join that term of collective risk management into a term which we actually use in the risk and compliance industry, which is called as third-party risk management. Now, if we just join these two dots, which is in terms of collecting and growing across together, which is one way of looking at it, because all of these are global organizations, whether it's automotive industries, BFSI sector, or pharma sector. All of these will have to actually grow and take the respective vendors, suppliers, everyone together to grow. While actually doing that, you have to ensure that you would actually have to maintain the risk of the organization while dealing with everyone. Which now means that when you actually have to take everyone together, while you're also ensuring that your risk is being managed across, you also need to ensure the final customer and the end consumer who also needs to be protected across over here. So that's how I believe the entire collective risk management will actually have to have a play.
I think, Sushant, it will also be interesting to see in this collective risk management, how much of data sharing is required between these players, these partners, so that as an ecosystem, you're managing, mitigating risks for the entire ecosystem rather than each one looking at themselves. That will be an interesting play to see.
Just to take a quick example, what Australia is coming across with are two separate regulations on this collective risk management. One is design and distribution obligations, and one is an obligation regarding your financial and the automotive part of lending across to the end consumer. Now, what these two obligations and the regulations talk about is you as a bank or as a financial institution are dealing a lot with a lot of suppliers, a lot of actually middle management firms which are actually selling across to the consumers. Now, while dealing across with both the suppliers and the middle parties over here, you need to take them together. You need to ensure that whatever data you guys are sharing across, whether of the end consumer or your respective products as well, or your financials as well, you need to ensure that they are being shared in the right spirit. They are not being exploited and they are not being abused by the financial institution against these respective third parties as well as against the end consumer, and equally vice versa.
Okay. Okay. And Gautam, since you're seeing that there is always a constant threat of disruption is always there. I think you talked about AI, robotic process automation and ML, which is also becoming a major trend in most of the companies these days. I think even BFSI sector is also not staying away from that. I think robotic process automation is definitely the main thing almost every big conglomerate is going after. Now, if you see that these kind of disruptions in the business model, in the technology space, and some new technologies are also emerging, the ecosystem is also evolving on a day-to-day basis. So the role of a C-level executives is becoming more and more complicated now. I think so. Someone needs to protect his interests. Someone needs to make sure that whatever strategic initiative that he has outlined for the overall year, it's actually he's able to deliver on that. So how does the risk and compliance function works in collaboration with this C-level in making sure that we're not only protecting the organization, but also moving ahead in a more innovative manner?
Fair enough. So how probably our organization and one of the banks which I'm dealing with, how actually they are actually taking across with this kind of a statement across is that the risk and compliance function is the core, is the core of the entire business. What they have to do is anticipate all the risks, discover them, and ensure that there are four different kind of scenarios which they should be tackling in every single stressful environment, whether it's a pandemic or whether it's a recession or whether it's any kind of thing, right? The first and the foremost is obviously customer protection and engagement. That's the first and the foremost. The second is definitely workforce protection. So protecting your employees from every kind of situation, whether it's pandemic or whether it's recession, ensuring that they are able to serve the customers. The third is actually your financial stress testing, which means that the moment you ensure the C-level suite have to ensure that their financials are in a stable position to sustain themselves to cross this particular or any kind of scenarios over here. And the fourth is definitely to maintain your supply chain. Now, when you say supply chain in a BFSI, it's more about the product, it's more about the money flow, versus a supply chain can be different for a CPG or a FMCG industry. But definitely these are the four pillars. If you actually stand across on these four pillars, then actually your C-suite and the risk and compliance will play a big role to ensure that these four pillars are standing intact without actually being shaken across by any incident in the world.
You for the question.
Okay. And Gautam, based on your experience, what are some of the common mistakes that today organizations make in terms of the risk and compliance? I know we always think about risk and compliance whenever some big fraud happens, or some kind of a major distress happens, or some major loss happens to the company, whether they got a big penalty from a regulating body. So what kind of mistakes that you are consistently seeing happening despite of all the maturity which has happened in the risk and compliance sector in the last 10 years?
Well, one of the key things you have already answered across in the question itself, that people actually think of risk and compliance after an incident have happened. So that's the biggest mistake. People should look at it as a preventative measure rather than as a reactive measure. So the moment you look all the risk and compliance as a preventative measure, not think of this as a liability, but rather than as a preventative measure, and to ensure that you are actually able to prevent the incidents, even the recession, those kind of things you can actually prevent by doing your good financial stress testing. You can actually make scenarios to actually prevent some kind of those things. And the best example would be RBI for that matter. The way RBI actually handles the interest rates and the kind of rigor they play around in terms of maintaining the liquidity in the Indian market, none of the other geographies will have that kind of a rigor as done by the RBI. Not even RBI, which is in Australia, or not even in UK. UK and Australia are far more conservative, but yes, definitely India is one of the most best managed banking sectors in the world. So that's one of the biggest examples. That's one of the biggest, again, mistakes, as I called that. Look at this as a preventative one. The second is definitely that resilience, as this word is probably trending quite a lot nowadays. Yeah. Resilience in the operations. I think if you actually manage your risk very well, if you can anticipate your risks, and if you have a proper planning around your risk, what are the control measures you can actually take to ensure that whenever there's a kind of a need for either BCP, now forget the pandemic, because none of the, even the nations are not prepared to deal with some kind of pandemic. That's totally unsustainable. And and people are not prepared, or industries or economies are not prepared to deal with that. But in case of a normal resilience, I think if you have a good risk management framework, whether it's liquidity, market, operational compliance, everything, if you have that strong and robust enough, you can actually deal with that pretty effectively. And definitely the third would be in terms of you're defining your risk assessment and your risk appetite statements. The moment you know that how much risk assessment I need to do in my organization and how much risk appetite I do have to go into the industry and to go into the market, that will actually define you as a player in the industry. And definitely your risk will actually just come down, and the moment there's a trigger point, you will just smash it down with your controls.
Cool. And based on your experience, what are some of the lessons we can learn from the BFSI sector, or where you have spent a lot of time, and especially the people who have now not worked in the BFSI, people who are coming from a telecom or maybe CPG, FMCG, maybe retail background. So retail and CPG, FMCG may not be that highly regulated like your pharma, telecom, and BFSIs of the world. So what are some of the best practices that you have seen in this sector that other sectors can leverage?
I'll repeat one of the things which I've said in the session earlier, which is efficiency versus ethics. The banking and the pharma sector have a lot of ethics-driven environment versus the efficiency-driven environment. So technology and those kind of firms, or any kind of efficiency as well, they actually drive a lot of things through the marketing and conduct and those kind of things, which should be in the right ethical manner. If we do that, I think that's one of the key lessons which people can learn from BFSI and pharma industry. The next is in terms of governance and working with your respective regulators. BFSI and pharma sectors are so closely regulated, as well as they work in so much close coordination with the regulators and the government, that they actually take almost a cohesive decision making. So in case the other industries, howsoever are they, in case they work a lot more closer with the regulators, and if possible with the government as well, I think they can actually be far more ahead in their decision making and not actually falling behind in terms of, or falling flat in terms of whenever there's any kind of industry incidents.
Okay. And in terms of your experience, what are your two big bets for 2020?
The bets are a bit different 2 months back, but I think it has changed by now. So the one thing is definitely the ops resiliency. The way the ops resiliency was defined 2 months back versus now, I think people will have to go ahead and change all of the definition and redefine the ops resiliency completely. I was actually just going through a BCG report, and the way the BCG have actually done the trending of that particular industry across India, only for India, which is the BFSI sector, which is the services sector dealing across with all the backend operations. The kind of insights they have provided across is that resiliency across either whether it's work from home, IT, infra, reaching out to the customers, is actually lacking behind across the world, which has to go ahead. So the moment every single organization in the world who have a back office in India have to look at it in a different picture now. The way they want to define it have to change. So that's one of the biggest things which is going to come across. And definitely while you do that, you need to keep across your risk and compliance in your mind, because you can change your definitions, you can change the way of working, but without your risk and compliance, you'll not be able to implement that across. And the second is in terms of risk and compliance would be in terms of digitizing the entire risk and compliance environment to ensure that it have a continuous and a controlled fashion and continuous controlled environment for the organization. What's happening in the current world is that some of the organization in the Western Europe may possibly leading towards that, but the entire world will have to now actually follow them very fast, which is the moment Australia or US or India, they actually are much more reactive in nature, which means that they have isolated controls. They actually only test those controls which can actually just go wrong, or once in a year, or as and when the controls actually take place. The moment it's a continuous control monitoring, it means that now you just put across a digital layer which will keep on continuously monitoring the entire controls environment of the organization, and there's less of human intervention, which can be done through AI, RPA, and ML equally. Some of the organizations, like I may actually name a few, Credit Suisse and Morgan Stanley are the leading banks who have actually put this thing across in the world. Not every other bank, but I think we'll have to follow them to ensure that this is going to be the next big thing.
Okay. I think Sundar and me, we both were discussing on this topic prior to this episode, that if we have to start a new venture, at what stage we make a decision that we really need to invest in a risk and compliance practice, or we need to set up a new department? Is there some kind of a maturity curve an organization has to achieve or reach a certain critical mass when they decide, you know what, now this is the right time to invest in risk and compliance?
I think risk and compliance is something which you can't avoid even on day one. So compliance, definitely, risk as well. I mean, even a startup, you are taking a calculated risk. Otherwise, you wouldn't have even done a startup. You would actually have been doing something else. So that's one thing. So you are actually into the risk world as soon as you actually said the word startup. Compliance is something you have to follow. Otherwise, you actually cannot operate in the environment you are dealing with, which means that you have to follow the regulations and the regulators as well equally. Now, the point in terms of the maturity, definitely it can be differently. It will have different maturity curve across the size of the organization, the kind of risk they want to take, which is in terms of, we normally call it as a risk maturity curve, which can actually go into discover, define, automated, and finally into a fast and the final maturity stage, which will actually be like more of everything being digitized. There's no human intervention. While the first phase in terms of discover would be like, you're doing the bare minimum thing. The skeleton is there, but definitely you will have to have it. You don't have a choice except you can't avoid it, the function as a whole.
So Gautam, before we conclude our today's episode, any interesting lessons that you learned in the industry? I know you mentioned about ethics versus efficiency, which is a very interesting part that we learned today. And apart from that, if there are any other interesting takeaways, any interesting lessons and tips and gotchas that you want to share with our audiences, we'll be really happy to hear that.
Yep, definitely. I think governance and risk management have to go hand in hand for any organization. So just maintain a balance of your business governance and your risk and compliance function. The moment you actually lose one of them, your organization will not be able to go into a sustainable environment. And definitely the last one in this current environment, stay home and be safe.
We would like to thank you for taking our time and talking to us about risk and compliance. That's a pretty new topic for us, for our episode and for our listeners. So we'd like to thank all our listeners, and if they have any questions or comments, please post it below the video. And if you have any other interesting topics that you want us to talk about in our upcoming episodes, please talk about that. Please mention that. And please stay safe, stay connected. Listen the request that your local health bodies are making about being quarantined, keeping yourself in isolation, and respect that. Thank you very much, guys. Thank everyone.
Thank you.